The U.S. Federal Reserve has started its June meeting and is widely expected to further raise its federal funds target rate in line with its commitment to curbing skyrocketing inflation. The question is, by how much? And to answer that question, I have Professor Shin Sang-hyup at Kyung Hee University live on the line. Professor Shin, it's a pleasure to have you with us.
My pleasure.
Right, so Professor Shin, how high is the Federal Reserve likely to raise its rate this time around?
Well, I think the possibility is very high. There was a report that the consumers' prices in the USA increased dramatically in May. Actually, it was increased by 8.6%, which was the highest one in the last 41 years. So on the part of the USA government to control the price increases, certainly they should increase the basic interest rates. I think FOMC, Federal Open Market Committee, would raise the basic interest rates by 0.75% this time. Currently, for your reference, the basic interest rate in USA is 1%. So after the decision made by FOMC, the basic interest rate in the USA is still very low, only 1.75%. So certainly they will decide to raise the basic interest rate this time by 0.75%.
Right, that is quite a raise, of course. And before I go into the impact of that particular raise, Professor Shin, how long, I understand this is going to be difficult, but how long does the Federal Reserve's commitment to such stringent monetary policy look to last?
I think considering the economic conditions, not only in the United States, but also global economy, I think the USA government will take such a stringent monetary policy for a while, until at least until the end of this year. There will be 5 FOMC meetings, including this one, which is scheduled to be held tomorrow. They will have 5 FOMC meetings. I think at each meeting, the USA government, FOMC, is likely to raise at least 0.5% basic interest rates. Why? Because then around the end of this year, the basic interest rate in the United States would be 3.75%, which is still less than 4%. So to control the price increases in the United States, certainly they will continue to take the very stringent monetary policy, I think.
Right, and staying with that, Professor Shin, how does the Federal Reserve's expected rate hike look to affect the Bank of Korea's future course of action?
Well, in fact, if USA government raised the basic interest rates, which means that the value of the USA dollar will be stronger. So on the part of the other countries, then they should have to, they wanted to maintain appropriate, acceptable exchange rates against USA dollar, because this is very important for their trade and for the economy itself. On the part of Korea, we are not exception. Certainly, for us, to maintain the appropriate exchange rate against USA dollar seems to be very important for exports. So the Korean government just tried to, Bank of Korea tried to increase the basic interest rate as well to maintain the appropriate exchange rate against the USA dollar, but not as much as the FOMC does. But according to the Bank of Korea government, higher-ranking official, they are considering take the so-called baby step. The baby step means they are considering raise the basic interest rate by 0.25%. This is very important. Why? Because if the Bank of Korea raise the basic interest rate too much, there will be a the negative impact on the Korean economy. There will be the negative factor on the Korean economic growth. So on the part of Korean Bank of Korea, they will raise the basic interest rate to some degree, but not much.
Right, and staying with what you said then, Professor Shin, so like you mentioned, raising rates is likely to push the US dollar to fresh highs against its major currency rivals, including the South Korean won. So how does that potential scenario look to affect South Korea's economy? Could you tell us a bit more about that?
Yes. The exchange rate change could give, it has two sides. Which one is positive side, which one is, another one is negative side. The positive side is this. Well, if the value of the Korean won against the US dollar weakened, the Korean exporting companies could have more motivations to their exports. Because they could make more money, simply because of the exchange rate change. But I think this time we could not expect to get such a kind of the economic profits from our exports. Why? Because considering the global economy, well, I think demands for the Korean products could not be strong as we expected. What I mean is that 2 years the pandemic induced the global value chain disruptions and the Russian invasion of Ukraine, and so those kind of things make the global economy in a bad shape. So even though the Korean the exporting companies want to export more, the demand for the Korean the products in the global market could not be as high, as strong as we expected. But the other one negative impact is that there must be the high risks of the inflation, because when we import some raw materials, we have to pay more money. Then more money will be spent into the market, provide a market. Then because of this, the weakened Korean value against the USA dollar, there could be the higher risks of the inflation. So I think this is we will get more the negative impact from the weakening Korean currency value against the USA dollar this time.
Right, I see. And Professor Shin, then staying with inflation. So inflation is running high across the world while growth prospects are being slashed. But the central bank here in South Korea has dismissed the possibility of stagflation for South Korea. What are your thoughts?
Well, I think the stagflation is getting closer to us. The Bank of Korean officials said that, potential annual economic growth rate in Korea, they changed it. The potential average economic growth rate in Korea dropped to 2% from 2.7%. Because of this, 2% economic growth rate means to us is that we will not have the stagflation in Korea. But about this, the forecast made by the Bank of Korea, many experts, and including some international economic organizations such as the IMF, they have very negative perspectives about these kind of the analysis made by the Bank of Korea. So I think that we cannot exclude the possibility of stagflation in Korea, regretfully.
Right, I see. And now one final question before you leave us, Professor Shin. What are your thoughts with regard to the Yoon administration's economic agenda policy?
Well, in fact, the new government led by President Yoon, actually, they want to make every effort. They try to make every effort to help the private sector and the Korean the enterprises to be able to play the main actors in the Korean economy. I think it could be realized through the regulatory reform and tax reform. I think that will be very important. In the middle of the very unfavorable global market situation, one of the best ways for the Korean government is to invite the private sector and business entities in Korea to help or maintain sustainable dynamism in the Korean economy. I think that will be very important.
Right, I see. All right, Professor Shin, thank you very much for your time and your thoughts.
My pleasure.